So let's hope that you have a little bit of an understanding now about uh, merchandise inventory and how that's recorded as the adjustment. Again, it's very similar to supplies, and prepaid insurance are going to give you a beginning balance, or you'll find the beginning balance on the worksheet, and they're going to have to give you an ending balance to tell them how much inventory is in there. The second one's a little bit more difficult in the fact that we have to do a calculation, but I want to give you an understanding about what uncollectible accounts expense is. What it simply is, it's an allowance, or it's an understanding that businesses aren't going to collect everything that's bought from them on account. So you go into a store, or a business goes into another business and says, hey, I want to buy this from you, and we'll pay you back at the end of the month, and they don't pay it. So it's uncollectible. It means that we have to understand that a certain amount of the goods that we sell, people aren't going to pay for. And that's kind of the background of what uncollectible accounts expense is. It's just simply an account in which we keep track of uh, how much of the goods that people have not paid for that we consider to be uncollectible. Um, Again, that's simply what the understanding of this is. Now, if we take a look at it, we understand, or every business understands, that certain amount of the goods that are purchased aren't going to be paid for. And there's a bunch of different ways that they can calculate and determine how we're going to record that as an expense, because we've paid for that, and now we're looking to receive the money back from somebody else that's bought it from us. If we don't get it, then it's an expense for us. Well, there's two ways that they can do that. Either they can look from previous years and they can figure out in a percentage that they can say, well, from last year, 1% or 2% of our goods that were purchased were recorded as uncollectible, meaning that they didn't pay 2% of it. Or what they can do is they can find a company that's very similar to us. And so if we're a new startup company and we don't really know what that number is, we can use another company that's very similar to us and use the industry standard and calculate it that way. Okay, so just understand that this is an estimate. That number is always going to be changing. We have to record that expense in our books because we are going to have some sort of negative effect for people who don't pay for their goods that they buy from us. From there, it's very simple. So let's go ahead and do the math behind it. We're going to pretend that we had a total sales this year of $124,500. Now, from previous knowledge from previous years, we found out that about 1% of those goods are uncollectible. Well, then that's typically going to be what our adjustment is. We're going to take our total sales and we're going to multiply that by our percentage, and that's going to give us our estimated uncollectible accounts expense. Now, this number, unlike what the adjustments we've done in the past with merchandise inventory and supplies, this is the actual number that's used in our adjustment. So we're going to take the $124,500, multiply that by the 1%, and that's going to give us our $1,245 as our uncollectible accounts expense. We're simply going to then just add that into our adjustment accounts, where our allowance for uncollectible accounts, okay, is going to be credited, and our uncollectible accounts expense is going to be debited, because expense accounts are increased on the debit side. We now understand that about $1,200 in goods aren't going to be paid for. And so that is the second adjustment. We're just simply they're going to have to give you the amount of sales, and you're going to have to multiply that by the percentage that they're going to have to give you, and that is the adjustment. Again, remember that this is the actual adjustment number. So let's go ahead and do the next section then, the 14-4, and we'll move on to the next adjustment after you've completed that.